So guys, we are just 3 weeks into the new year and so many things have happened on Bursa Malaysia. Now, there are at least 3 companies that have dumped massively. I think 2 to maybe even 3 days of limit down.
Yeah.
And some of these shares are actually suspended for buying, I believe, which is basically suspended for trading, right?
Yeah.
So, the disclaimer is that we do not own any of the shares mentioned on the slides.
Maybe just one only.
Yeah, maybe just
one, which is Imas Pro.
Yes.
Yeah.
So, this is very, very interesting, and we're going to give our thoughts on what's happening. Hello investors, are you ready to elevate your portfolio in 2024? On the January of 29th, 8:30 p.m, I will be conducting a webinar called Winning Stocks and Strategies for 2024. We will be sharing with you our strategies and methods on how we made 2023 a profitable year in the stock market for us, as you can see here, and how we're taking that same strategy, doing some modifications for 2024 in hopes of repeating or improving on the returns compared to last year. Now, the only thing is there are only 500 seats, so don't miss this chance to transform your investment game. So sign up now before the seats are gone. Link is in the comments and description. So there's actually, as I said, there's a lot more than 3, but the 3 big popular ones are YNH Property, number 2 is Imas Pro, and number 3 is Rapid Synergy.
Yeah.
I actually joked on our Instagram account, it looks like a triangle, right? You know, the Pythagoras triangle.
Correct.
If you draw a line below.
Yeah.
And a lot of this is linked to one person. So they're all in somewhat different industries. But when you look at it, it's all linked. And it's no surprise that it's linked, right? I mean, what would explain such similar drops in completely different companies?
Yeah.
And there's this guy called Dr. Yu, who essentially bought these shares on margin through this group of people called warehouses. This is actually actual technical term for people who lend money.
Yeah.
And they probably charge interest. Actually, they do charge interest on this. And the minute they cannot pay, Dr. Yu is forced to sell some of his shares. And because he borrowed money on his other shares, then he used those borrowed money to buy new shares. And then he gets someone else, to another warehouse maybe, to lend him money on the second group of shares to buy the third group of shares. So when one falls, everything else falls.
And also not only Dr. Yu, but people who invested alongside with him with the warehouses.
There you go.
So when they heard the rumor, then there goes the domino effect.
But Dr. Yu it sounds like it's the big one, right?
Correct. And what's interesting is that there is a few, according to this paraphrase, I would say, is it really rumors or not? I'm not sure. But then somebody got share, is kind enough to share about this. There are some brokers that actually are involved in this share borrowing. So one is MBank, CMB, Maybank, Mercury LHB, and UOB. So this is like a on the side kind of thing lah. Not sure how big that position is, but I think it's quite massive because the sell down was like 1 billion to 2 billion of market cap.
YNH is the biggest, right?
Yeah.
Or is it Rapid?
Rapid and YNH also.
So you see Rapid is down about 90%,
correct,
right?
Yeah.
So if they're down 90% and they're already worth 300 million market cap, it means, for those of you who are not fast in math, they lost about 2.7 billion in market cap just like that.
Yeah, YNH also is about like 1 billion market cap.
Yeah.
Like 3 weeks ago. So yeah, that's pretty a lot. And they also want to get more security from Dr. Yu. So because they are afraid that what is pledged as collateral is not enough to cover the losses. So there's more things that Dr. Yu needs to pledge. And they might worry that he cannot pay back the loan. So this is just the gist of the story of what's happening in the market right now. It's all because of this one individual. Yeah, and basically it's a margin call and it causes domino effect to other counters as well. So these are the few, actually there's more than 6, there's actually more to it. But we just selected a few counters that actually limit down on the same day as these 3 counters. Because there's a lot of spook in the market also, because when this one warehouse actually got affected, what's going to happen to other warehouses, right? Or what's going to happen to other people who borrowed money to invest in this kind of like, I won't say are they really like fundamentally sound? I'm not too sure.
I think some of them are what
Yeah.
I hear from people who have invested, but you see, it doesn't really matter, right? In the short term, prices always behave based on volume, based on bid and ask. So if people are forced to sell, then it doesn't matter if it's fundamentally good.
Exactly. So that is what is appearing in the market. And what's next is that our speculation, because there's another group of people related to the Hexstar and also the Chin Hin group. So according to our sources, they are also quite highly leveraged in terms of borrowing money and investing in these companies.
Well,
so
one of the ways you can tell whether a group of people are highly leveraged is how fast they acquire these
their
shares.
Yeah, exactly. Yeah.
Unless, I don't know, they have like 10 billion stashed away, chances are they have to get capital from somewhere.
Exactly. So the concern in the market is that whether these two groups of people will actually also got affected because of this limit down. But so far, it looks okay. I mean, there is some drop in Chin Hin Group, about 27%, and this one is around like 18th of January's share price. Another one is High Tech Padu. I believe also Dato Eddie was inside this company, but he reduced his stake quite tremendously, Eddie lah. So yeah, hopefully.
I believe like the Chin Hin Group, they were selling also, right?
Yeah, correct. Chin Hin, there was also a little bit of sell down. I'm not sure about today, but I didn't really track, But
I mean, like the insiders were selling, as you remember.
Yes, correct.
Right?
Yeah. Insiders were selling some shares.
So maybe they're onto this perils of margin calls a lot faster than the doctor.
Correct. So as a result of this sell down, right, the brokers are right now more conservative in lending out money to people. And they want them to actually use cash upfront.
Yes.
Yeah, I mean, funny thing is that in the past few months or maybe 1 year, brokers were promoting on margins. They are actually encouraging like retail investors to open a margin account. And right now, because of these things happening, right, now they want to like, you know what, maybe it's time to put in like some cash upfront account.
The thing I've always never quite understood about brokers is why isn't the default cash upfront? I'll tell you what, my experience has been sometimes if I trade, and you know this, we trade, I don't intend to use margin, but because it's a margin account, sometimes I buy more than what my cash has. And then let's say if I buy it, if it goes up, okay, not an issue. And it goes down, then suddenly I'll just get a random call from broker, hey, Mr. Gan, you need to top up here. So why? Oh no, you bought shares more than your cash or that you margin. Oh my goodness, right? So it's quite annoying because for someone like me who's only cash up front, I want that technical barrier or limit, so that if I do make a mistake, then it's fine. They'll just say not enough cash. They say, oh, okay, good, I made a mistake. Because sometimes when you key in, you add in extra zero.
Yeah, exactly.
And in fact, in the past, if you know, like some of the accounts that I manage, last time it's by 100. So you have to key in based on 100. So let's say if you want 2002, you have to key in 22 because it's times 100.
Right.
So if you rely on mental maths of you're half awake, you're keying in trades at 3 a.m. Sometimes you add another zero. If you add one less zero, if you add one less figure, it's not an issue, right? But
you add one more.
That is the issue, right?
Yeah.
And I feel like it makes more sense to do that to protect. And the second thing is to actually ask people, do they want margin? To get them to ask if they want margin, then you give margin.
Correct. I think right now the broker, probably because in the past 2 years, the market has been pretty down. There's not much interest. So they are trying to drive up the market a little bit, and hence they introduce margin, which is to give people more liquidity to invest in the market. So that's my take. And right now, because of the sell-off, they want cash upfront. Yeah. Okay, so the takeaway is, of course, if you notice the counters that we share, right, Y&H Property, Rapid Synergy, I mean, you look at their profits, right, it's not really that enticing also. They are trading like around like 50, 60 to even 100 times PE.
Yeah.
So it's quite an unjustified valuation counters. So be cautious about this counter when you see like every day they are going up, day by day. And especially for SCIB. I think SCIB is also one of the example that every day you just see that the prices just keep going up without any justification.
You know what's crazy about SCIB? It's happened before.
Yeah, exactly.
Or maybe not exactly, but 3 years ago, remember?
Yeah, the
Them
current.
and Sabah Dynamic. These two, right? It happens in just 3 years, people's memory.
Yeah, exactly. So yeah, that's the sad takeaway. But just be careful around these counter. Always want to buy companies that have sound fundamentals, backed by good valuation. And yeah, that's about it for today's video. And just want to share a little bit on our FIRL Pro performance. So for December, we actually performed quite pretty well, which is about 27%.
Will we do better in January?
Yeah, you look forward to that. Most likely, maybe.
I also don't know.
Yeah,
he does the calculation.
Yeah, most likely it is better.
Okay. Anyways, so one of the things about FIRL Pro is that, if you're really busy, but you also want to invest in stock market, but you don't have the time or you don't want to do research, right? It's perfect for you, right? We write reports for you, minimum 2 a month. But sometimes, like in January, we'll have 3 reports in a month to help shortcut your research journey, right, by 90%. And if you're afraid, if you're the sort where, yes, you can do analysis and all that, but you're afraid of getting it wrong, or you're afraid that maybe you do not have a second eye or second opinion, this is also perfect for you, because 75% of the companies that we put into this portfolio and the reports are actually positive. So you don't have to feel so bad, And yeah, the cool thing is, if you do sign up and in 10 days, you say, nah, you know what, not for me. Money back guaranteed. Send us an email. We'll refund you, no questions asked, except maybe just to ask why you decided to refund. And if you want to get a taste of what FIRL Pro is like, head over to the free sample section to download, to get a glimpse of, I believe, 2 reports.
Right? Yes, correct.
That you can read. And the links are all in the description and comments. And guys, thank you for watching the video as usual. This is a pretty short video, but I think this is a reminder that margin calls or trading on margin is typically a bad idea. And I think I want to leave with this lesson, right? So many of these people who are actually on margin are actually rich to begin with, right? They do not need that additional million. And yet that is exactly what they are doing. I was saying in our analyst group that if you are poor, or if you only have less than 10,000 ringgit to invest, and you invest on margin, still I wouldn't kind of promote that. But if you did that, it kind of makes sense, right? Because you started at low base. What's there to lose, right? Then you just go for it. You swing hard. And if you become bankrupt, so be it, right? You're already so close to bankruptcy already. Anyways, I'm not saying if you have less than 10,000 ringgit, you are close to bankruptcy, but I'm just saying, that's the mindset. But if you are worth 10, 20 million and you take 50 million of margin, it's like, why? You're just in that one activity, you put that 20 million at risk. And this is exactly what's happening. And I'm always reminded of the Warren Buffett quote, why risk something that you have for something that you don't need?
Yeah. And if you want to learn how we actually invest or even safeguard our money, we actually have this webinar coming on the 29th.
Yes.
So make sure to sign up. It is free. We have a very limited spot for 500 people only. So once all these 500 people is taken up, there's no.
How many of the slots are filled already?
So I think that's about half already.
Half, okay.
Yeah. So make sure to sign up and stay tuned on 29th of January.
See you next week.
See you guys.
Bye-bye.